Hi there and welcome to Monday's forecast, where today we're discussing the euro against the US dollar with director at Forex Live, Adam Button. So Adam, the downtrend in the euro seems to be set to continue and has been evident against the US dollar so far, but what are you expecting from this currency pair in 1 month's time?
The euro has resumed its downtrend, and it's really a factor of the situation in Greece, which is clearly coming to a head toward the June 5th deadline for IMF repayment. So in the month ahead, that's going to be a date to circle on the calendar. That being said, aside from the threat of default, Greek headlines are less impactful than they might have been earlier in the year. The country is largely ring-fenced, and there's really no fear about contagion. So even a Greek default might turn out to be a trade that only lasts a month or two. And the other major factor is the U.S. economy. We saw in the past week that even moderately good news gives U.S. dollar bulls a great, or gives the U.S. even moderately positive U.S. dollar news provides a tremendous lift for the U.S. dollar. Housing starts last week, and some other second-tier data, really boosted the dollar. And that's a sign for me that the dollar bulls are excited once again, and I think that's going to drive the euro lower back down towards 105. I don't think it's soon enough in the month ahead to get there, but that depends on Greece.
Looking further ahead to your midterm projection, and perhaps one of the most significant factors on the euro at the moment is the potential Grexit. Amid growing concerns, Athens may default on their payments. But what about the US? Which key indicators will likely shape your 3-month projection?
Yeah, if there's a Greek default, we'll get to 105 and then down to parity. I think in fairly short order as the market kicks and screams, at least for a period. Beyond that, the focus returns back to U.S. fundamentals, and I'm convinced that some point within the next 3 months, the market will swing towards a Fed rate hike in September, and that will provide a strong tailwind for the U.S. dollar, and will give it the broad kind of strength it needs to make headway, slow, steady headway against the euro down below 105. And perhaps a test of parity. The flip side of that is the Eurozone. The economy is showing some better signs, but with the ECB buying $60 billion in bonds a month, it would be very hard for the euro to sustain anything more than the kind of rally we saw in April, where we got up to about 114. So it's sort of 9-cent rally after a tremendous decline. So I don't see much scope for euro gains from here, and it's clear now that this 114 is level around there will be a difficult nut to crack. So the better money to be made is on the downside, and in 3 months I expect to see something around 105, 103.
Lastly for today, your long-term 12-month forecast for the currency pair suggests the euro-dollar could break parity. Tell us why.
In that sort of time frame, it always comes down to growth. The U.S. has consistently overpriced its growth prospects, and traders have looked to see this pickup in investment and growth towards something like 3% and rate hikes. And looking out into the longer term, the Fed will have hiked once or twice in that period, and I don't believe the U.S. economy is strong enough to sustain it, and we'll start to see some weakness there. And at the same time, the weaker euro will start to provide some support for the Eurozone in terms of exports and QE as well, with rates so low. So within the next 12 months, we will have seen a low in the euro. In that sort of time period, you have to look at the day-to-day and scale back. But somewhere around parity or perhaps as low as 95 cents is for me the time to start buying euros, because it will that to me will be the low.
Thank you for joining us today, Adam. That's all for today, but check back with us throughout the week for more forecast updates. Goodbye for now.